Hey guys, thanks for joining me. I just wanted to do a real quick market analysis here. We're seeing some of the primary results from the U.S. midterm elections come out here, and so far we're seeing some pretty interesting market action here. Namely, look at the U.S. dollar. So, in a time where we just had them come out and run up and take out the old highs, from previous back in August, they've since declined quite quickly and actually gapped open quite a bit going into the new day. And I'll just put on a day divider here. You can see that right on the end of closing at 5 p.m. New York time. You can see the new day opening up, open up way down, gapped up, and then now we're starting to run back down again here. So quite interesting. And again, I'm just going to sort of counsel you to remember what happened when Trump got into office. And I can't remember exactly what day that was. I'm just going to do a quick search. I think it was November. I want to say November 8th for some reason. Yeah, it was totally right. November 8th, 2006. So, for example, if we went back to November 8th, 2016, that was right here. You see this? November 8th, 2016, or I guess November 9th. So this was the 8th, and then he got elected overnight, and then this was what happened. So just, again, remember, we came down off of taking some relative new highs, and I'll just zoom out one more time here so you can kind of see that a little bit better. Yeah, here is November 8th right here. So same type of thing. We'd come down off of this sort of downward momentum here. Price had come up and it just cleared these old highs back in here. Very similar to what we just saw here with dollar taking out the previous highs from August, and then started to come back down to recapitalize some positions. Trump got elected, new day opened, boom, price cascaded down to a logical area of consolidation and rejected instantly, and look at the nice big bull move up that continued and set a new high. So I'm not necessarily saying that's exactly what's going to happen this time, but fairly coincidental, no? I mean, just came in, took out a previous swing high just last week, and price cascaded down to kind of catch up with that bear run. And then again, midterm elections open up, boom, price sweeps back down into another area of consolidation, and then we'll kind of have to see. So looking at this right now, there's only there's two areas that my eyes go to immediately on the chart. One being right under here, right about this area right in here. See these two relatively equal lows down here. Prices come in, they traded up, traded back down on a fairly shallow retracement. Basically just came back in and sort of retested the consolidation back in here previously we saw in the summer. And then expanded up nicely to run that high. So obviously a little bit of give back is expected. If we take a fib and run it from this low to this high, logical retracement areas are obviously going to be 50%, which we've sort of got that marked right here. The second one would be about the 72, and then the third one being right about that 79% retracement level. So anywhere 1, 2, or 3, we could see price return back down to. I don't really want to see them come all the way back down in here again, just because I don't think they need to go all the way back down there, and only because of what price has done in here. See how much it's worked this area in here. I really don't want to see them have to come back down and get into this this range of what are we, 94 to 95 again. I really don't want us to have to see that again. But just keep in mind, new elections, there's a power struggle going on, Democrats and the Republicans. I'm not political. I'm not a, U.S. political aficionado or anything like that. So all I know is that with uncertainty in elections comes volatility, and we're seeing that now. So this is sort of why I mentioned that So my analysis to start the week out was to see price come back down, retrace a little bit down into these levels here. We kind of saw that on Monday, and then I kind of felt it might go a little bit deeper, but I'm ultimately looking for price to run higher longer term. Obviously, there was a little bit more volatility in store, and if you remember me going back to my last live video, I had said you'd probably want to hold off on trading the markets on Tuesday and wait until all the election results come in, and then get back into the markets once sort of all the dust has settled on it. This is exactly why you do those sort of things. And main reason, I don't personally trade the U.S. dollar, but I'll trade the cross pairs, so Euro USD and pound dollar, obviously. And I had said that I am looking for a brief retracement. So these were kind of the levels. My line in the sand, I did not want to see the euro go any higher, was 114.80. And we just fell short of that just by a couple of pips. High on this candle is 114.72. So about 8 pips we just fell short. And so far it's rejecting. But this is so far a nice push down here. And they could keep cascading this down. So that's why I say I'm gathering short ideas for a continuation to the downside, because the only thing we don't have here is a run below this low under here, where we have the corresponding run above the high in the dollars. So I'm looking for another push down for them to take that. I believe that's where they want to head. And I think we've got a real good chance of that here. But again, this is why you don't want to be going into those elections, because if you went short, for instance, right in here, where I thought price could come up to and potentially start to roll over and gain some resistance at the 114.40 level, obviously you would have been blown out by about 30 plus pips. So you don't want to be holding on to big drawdown positions just because of a hunch. So you wait, you watch, you hold off. When all the major news and the election status come in, that's when you start to gather your bias, and you make sure, because maybe something crazy happens. Here's the flip side to this coin. There's a Republican president in the White House right now, but what if, for whatever reason, the Democrats come in and they sweep the Senate and they sweep the House? Well, that could change the dollar. Not long term. I think the Feds, who are still independently run of whatever governing bodies in power in the U.S., I believe they will pick the direction of the U.S. dollar regardless of what any monetary policy is out there that the government decides on. But I think the Feds will push this, but they'll use it to their advantage. So let's just say, like I say, hypothetically speaking, let's say the Democrats come in, they sweep everything, they take back control of everything, and all of a sudden the dollar, instead of reversing, the U.S. dollar, instead of continuing to make new highs and get up into some logical areas that, i.e. that I had pinpointed before, it just starts to dump, and everyone starts to sell the dollar, and starts to crash and recapitalize under this area here. Well, long term, I mean, maybe it does regain strength and continue to go up there, but you don't want to be caught in a position where you're trading opposite of where that market price is going, because it could get down there in a very, very big hurry. Again, as we saw with this Trump getting elected back in this price fluctuation right here. I mean, how many people do you think got taken out of the market on that price drop right there, right? Everyone who was long and who was correct on this move up here, all of them got their stop ran out. And that's all that was just a deep stop run and then a rejection and move higher. Again, how do you know that's not what this is? So I just don't want to see anybody go through any unnecessary pain. Long story short, I'm not going to say any more about that. Again, but you can see the dollar is selling off here. So they could want to rebalance a little bit lower. I like these two equal lows down here. Hope it doesn't come down that low. But if it does, just remember where you heard it, and I'd hope price would start to rebalance at that level and then start to continue higher. So if we do see that big of a dip, obviously Euro USD, we don't have those corresponding equal highs in here. We had a stop run that had come up very convincingly and then pushed price down. That's kind of why I'm electing to believe that the short-term dip down here is only going to affect the U.S. dollar, and we probably won't see as big of a move back up on the euro. Cable is something a little bit different. I'll talk about that here in a second, but I'm kind of hoping this level holds up in here. If it does give way, then you can pretty much guarantee they're going to come back up and retest this level in here. And if they want to really keep pushing this thing higher, then we do obviously have the equal high, or the swing high up at this area here, which that's a big stretch. And you know, I've seen crazier things and crazier fluctuations, but that's 150 pips from current location after it's already run, you know, another 100 pips from current, from the low of the day. So just kind of keep that in mind. I'm going to drill down to an hourly chart, and you can see here a little bit of indecision. They ran price out, took the stops. For anyone going short, dropped price down, and everyone's thinking, okay, well, this thing's going long now, or sorry, going short. And again, so they all dogpiled in here again, and then they just ran them back out again there. So very, very ugly price trading. You do not want to be involved in this. Hopefully this is going to be localized to right here, and it starts to smooth out and starts to get some sort of normalcy back in during London Open after the final results come in, when the day is done. But obviously it's going to take, obviously, still a few more hours for that to happen. I think it's still, it's only almost 8 o'clock now on the West Coast, so they've still got quite a few hours, and a lot of polls are still closing and counting up votes. So still a little while to go. So don't jump into anything yet. And as I was saying, the cable, very, very strong momentum to the upside. Definitely differing from what the Euro USD is. And it's mainly because of this here. You see that this here, Euro GBP, as I was saying yesterday when I did my live session, the result of the upward momentum on the pound dollar is directly related to the Euro USD, and they're manipulating the price on this one, and they're sinking it. And at the time I did that last live recording, they hadn't quite yet taken this low right here. And they, as you can see, they just did it as of close on Tuesday, and now we're into Wednesday's candle here. And so they came back down and pushed down one more time. I'll just drop down to a lower chart so you can see that. See, they took the low on close of yesterday, and they came down one more time right here. So this could be it for Euro GBP. They could start gaining some support here and then running price higher. If that happens, then you're going to start to see some weakness finally on cable, and then the Euro USD may push down if the US dollar decides to push up. So just kind of keep that. They're really looking like they're building some kind of level of sentiment in right here, you know, as some kind of resistance. Don't be fooled by that. They could easily spike this thing up one more time and reach into a new pocket of liquidity up above the 114 and get up into the 115. So just keep that in mind. Cable, same type of idea. We're at my line in the sand, as I mentioned to you. I always put you know, a level where I think price could run up to. We could see a reversal, and if it pushes through, I give you sort of the last resort. If price reaches this extreme level, do not hold on to that trade. Do not stay in it. You know, get out and run, because it's probably going to retrace deeper. You could certainly take the other side of that trade on that, but if as it continues to push up, you don't know if it's going to stall out here and then run the other way on you and continue in the intended direction and stop you out, or if it's going to reach for this high or what's happening. So when you counter trend trade, it's you know, you're definitely trading with the unknown. Whereas if you trade with the bias and the market direction, it's a little bit easier to pick your targets, and a little bit easier, obviously, to get paid. I mean, really. Anyways, so we're kind of at that level right now. I don't want to see price go much further than this right here. If they do, more than likely they're going to try and run this high here and potentially this high right here. So I'd like to start to see price roll over as a failure swing and then get back down here. If we do see this as putting in a resistance up at the 31.40 level, 131.40 level, this would be a very nice trade back down to try to take out this swing low back down here. That would be great. That would be a nice little swing trade. Another nice little 500 pips swing trade. That would be a nice way to finish off November if we could get something like that. It'd probably take them a week or 2 or 3, you know, better part of November, I would imagine, to get all the way back down to there to create some new lows. So if we can do that, awesome. That's what I'm looking for. I'll be watching this one going into London, which London Open hasn't quite started yet for Wednesday. So again, I'm going to let the dust settle. I'm not going to be jumping into anything. I would suggest that probably around New York Open, right around that 8 to 8:30 time frame, New York time, that we'll probably see markets start to stabilize a little bit. So going into, again, Wednesday, very, very minimal news coming out. We've got the Canadian dollar, some medium impact, and crude oil inventories, of course. Don't be fooled by this, though, because there are several instances where you look at news events and you say, there's nothing going on. There's a couple of low impact, one or two medium, no high impact news events. It's going to be a pretty quiet day on the markets. And then all of a sudden, that's when they come in and just smash price around, and you're like, oh, where did that come from? And again, Thursday, it's another big day of news, so late in the day. So if you're going to do your trading, wait until, I would suggest you wait until for sure all of the results come in from the U.S. elections, and all the polls close and all the votes have been tabulated and all the dust settles. I would definitely wait for that. But at the very least, I would wait for New York Open going into Wednesday, and I would be done trading before this news event hits here. So that's me. You guys do what you want to do, but that's what I'm going to do, just because I try to trade as much as possible with certainties. And when you get into these types of elections and things like that, that's when the uncertainty comes in, and that's when you get some pretty serious drawdowns and bad beats on the old account. And you know, depending on how much you leverage your account, you know, you're not too far away from ruin if you decide to over leverage. So anyway, not going to talk about that anymore. So that's kind of my thoughts on cable. US CAD. Look at this thing. I'm actually I got a long position off 2 weeks ago down in here at 1.300. Beautiful move to the upside. I captured about 150 pips, sold it just as price was coming down in here. It hit the highs in here. I didn't quite get out of the highs. I sold it actually right about in here once this low was broken. Got out of that, made 150, 140, whatever pips it was there, and got out, no problem. And then I was hoping for price to push even higher, and all they did was just one quick swing high here and dump price way back down. And as soon as I got back down here, I was looking for price to rebalance and continue higher. However, I was hoping they would have went a little bit lower. In my opinion, they kind of fell short. And you can see they just sort of retagged. Look at this. I'm going to drop a line here so you can kind of see what I'm talking about a little bit better. You see how long price has been collecting in that area, right at that red line. Like all of this market action in here. For, you know, a better part of a day in there, came up and just failed in 1, 2, and then in here again a whole bunch of times, and in here again, and then in here again. So it's just been days at that level. So I was kind of hoping we would have saw price tag down just a little bit deeper, not quite to this level here, but a little bit deeper on that. I was looking for that, about that 130.70. Didn't quite get it, and then price expanded to the upside quite nicely. So now we're back in here again, and really look at the next sort of level that we're in, and look at that consolidation. Right, you got small consolidation level in here for 3 days, and then the consolidated price in here for another 3 days, and then here at same level again for another day, and we're pretty much right at that level one more time in here. So on this guy here, I don't really want to see them come any deeper really than 130.90. I'm going to leave this level on the chart here. I'd tolerate maybe 130.80, but if price wants to start running back lower under here again, I wouldn't be too interested in any long ideas, and I'd be holding off for a little bit anyway. As you can see, this big failure swing up here, one big wick. That's not good for bulls on US CAD. They could want to be taking this a little bit deeper, and again, because of the elections, I mean, it's just it's basically a license for volatility. The market makers will inject and just push price around just in the name of the elections. It may not make sense in terms of charting technicals or anything like that, and they'll just smash price wherever they want to pick up the liquidity where they think they should get it at, and away they go. It's kind of like a non-farm payroll event or a FOMC release date. That's kind of what we're dealing with here today. So I would, like I say, just be cautious, especially on the Canadian dollar. When everyone thought this was a lock going higher, you know, back down in here and in here, you know, great, but you know, they're really sinking price quite rapidly. So I'm going to be watching those levels as well too. That's all I'm going to say about Forex for now. Crude oil, this drove me crazy today. I was watching price and was sitting in here and watching it forever, and then I ended up getting distracted, and I said I should have put a limit order in. I always do that. I always like to watch price when it runs up as much as possible, and instead of putting the limit orders in, only because you never know. You could see a big price fluctuation, something could happen and catch you off guard. You keep a tight stop in those cases, but a lot of times price will run up to your entry level and just miss it by like a pip or two, and that's what really drives me nuts, is the spread and you can't get into it. So, but look what price did today. I'll just put the 15-minute on. Came right up to our entry level. I had actually even called, to be fair, I had even called about 63.30 that price could stretch up to. So I said anywhere from 63.20 to 63.30 would be a great entry for a short. And I do know one or two guys in our membership group, they got in on that and took a nice short all the way down today. And you can see the highs on the high on this candle came in at 63.24, so easily would have covered the spread. And again, I haven't touched this or altered this. You can go back to my last live session on our YouTube channel, and you can see this is exactly, price was right in here, chopping sideways when I was discussing it, and I said this was the exact move I want to see up, and the cascading down, and that's exactly what it did to the pip. So congratulations to all you guys who got that trade. It was a great one. I wish I would have done it. I didn't put the limit order in. I should have, but it is what it is, and that would have been a nice $2 move if you got the low, almost a $2 move. So that's, by the way, at one contract, which works out to be about $5 a tick. $5 a penny, I guess I should say. On a contract, you can do the math on that one, guys. You would have made over $1,000 on that move quite easily. So that would have been a great day's trading if you could have captured that. And that's just for one measly little contract. So if you're just joining us and you're wondering all about this trading thing and you're not too sure about it, that's some of the potential that you can see. But again, had you been watching some of my analysis on crude oil for the past month, I had said, yes, price is going to go down, but in times of these consolidations, you don't know if you're going to get a reversal or a continuation lower. My targets I had picked at 63.20, which was easily hit a little while ago. My next target is 59.30, and so far we're making a pretty hefty push. But I did say, again, I don't know what's going to happen underneath this low right here. As every new low is the target. Every previous low is the new target, but you don't know once it gets past that last low what's going to happen. So you kind of got to elect to wait and see. But if you would have been trading along with me for the past month since the highs here in early September, then you would have capitalized pretty good on crude oil along with me. So anyways, that's all I got to say about crude oil. That is one and done. Don't know what's going to happen. Let me clean this chart up for you here. Going forward, I should have done that actually. I did want to save one level. So this level was just taken out right here. See the lows under here, taken on Tuesday. That's done. Next area of lows I like right in here, and I'm going to put it on the body lows and not necessarily the wicks, just because everybody's price is different. So I don't know exactly what it is on your chart, what these levels are. Like for instance, this low candle right in here comes in on mine at 59.93. Could be a little bit different on yours. So I'm just going to elect to say that these are all relative equal lows in here, and I believe that could be the next target on the downside, which comes in at about $60, pretty much even. If we see a run below 60, we should see a stop sweep of anywhere from 10 to 20. So that could take it down to 59.80, 59.90. Somewhere in there. That would be sort of my next target if we get price to cascade down further. Now, hopefully I'm not talking too fast for you guys. If you need me to slow her down a little bit, just throw it in the chat and I can. If you got any questions about some of the stuff I'm talking about, just throw it up in the chat there, and I've got it open on my left here. But as you can see, his price, so I'm going to put the day dividers back on here. So Monday's trading, Tuesday was set the high of the week so far, rejected, and then Wednesday sat sideways again, came up to a very logical area of resistance, and this basically all is just right back into the consolidation. See that consolidation from Monday, so from Friday end of day to early Monday for the majority of the day, and then the consolidation in on Tuesday, taking out the high, running through the stops, and then dropping, and then coming up, retesting those consolidation lows, basically, in here, the lows of that consolidation area, and then falling off again. So now if you take that idea and just kind of extrapolate it over on a smaller term, you kind of get the next sort of small consolidation area. However, be mindful though, this is the big thing, is this low, this is a new low that was just created, so the price has not been down there since March of this year. When was that low? March 5th. So bear in mind, that could be the low. So don't just go short just because price comes back up a few, 50 cents or 60 cents. You think, oh, that's the area, let's get short, and then they just smash price higher. So again, you don't want to be picking the bottoms, you don't want to be picking the tops. This could keep going lower. This could be the low right here, and then price starts to move higher. But at the end of the day, if price does come in higher, and you do decide to go short, back up into this area up in here, don't let price go any higher than up here. Crude oil inventory numbers are tomorrow, so you may want to elect. They'll probably, what we'll probably see going up to crude oil inventories is price will go sideways. We're not going to see big movements, I don't believe. We just had a big movement on Tuesday, so more than likely they're going to elect to chop price sideways until the crude oil numbers come out, and then they'll decide to pick the direction. So if price does travel back up to this level, do not go short if price starts going higher than 62.90. I really wouldn't be interested in it at all. So 62.90, that's my line in the sand. If I see price go back up to here, I'm not going to be taking any short ideas. I'll be waiting and watching price. But we'll see. It may not go any higher from here. It could just roll over and continue to go south. I don't know. Keep an eye on it. But so far, very, very nice bearish momentum on crude oil. And I've kind of talked about this a little bit in the past too, about what's going on globally with crude oil. It's a bit of a shit show out there right now, guys. So just be careful with crude oil. At any point in time, they could decide to cut production, and price will snap back, and the bulls will be back in control, and they're going to scream it higher. So again, you don't want to be caught in a short move when something like that happens. Keep your stops tight and the margin low. I should say the risk low, not the margin. Risk low. Okay. I wanted to talk about one thing. Look at copper. Look at the bounce we got on copper. Just happened here about 4 hours ago. Unfortunately, I'm not a robot, so I do not sit in front of the charts all day, all night, and have nothing else better to do. I was with my family, and I did not see this move down in here. Had I have, though, I would have probably got in on a long, because look at this candle right here. That was the low on the day, Tuesday. Right into the area that I was looking for, and look at the reaction on price. It just snapped right back in line. So here's what I'm going to talk about here real quick. So we get rid of this. So that came to fruition. We got a nice bounce. If you're long in this already, congratulations. Good for you. Love to see it. Keep your stops. Let me put it this way. I don't want to see. I like this price action right here. I like the reaction at this level, where it came back down and retested these old highs in here, in this consolidation area. I like to see that. Keep in mind, we do have some areas underneath this price movement in here where we could see price continue back down to. So what I'm going to say is, let's say, hypothetically speaking, you decided to get long in this area here, and you're riding up a nice long position, and you're in profit. Move your stop to break even. If you got in down here, move your stop to break even. And if price does decide to come back down, do not let it go anywhere past this low rate here. So about the 27, I don't know. And again, this is going to be different on your chart. So whatever this candle is, 1, 2, 3, 4 hours ago, if price is trading back down, do not let it go any lower than here, because they could want to come back and run through this area and recapitalize some of the positions off of this consolidation area back in here. So just watch out for that. But I am encouraged by that bounce. And what would encourage me more is if it could get through this next level of consolidation, as the resistance levels in here are pretty strong. But if they want to continue that bullish momentum upward, then they should do it fairly efficiently. So now, if you missed this move down here, like I did, I would say, I mean, this is kind of this is kind of a nice level here, but it'd be pretty perfect if they did it, which it never always gets absolutely perfect. But if they came back down to 273, and they were showing some sort of price comes down and wicks into it, and they were showing some sort of resistance, support in that level, you may be inclined to take that. Put your stop, though, again, keep a tight stop. I wouldn't let price go down any lower than 272, basically. So I'd give it about that variance right there, 10 tick variance. That would be about it. I'd keep it fairly tight, and normally I wouldn't trade with such a tight stop. But again, it's just sort of at one of those levels right now where it really is at the 50% level. Could go either way, and again, could also be affected by the elections. So that's sort of what I'm watching for there on copper, to see if we get continuation to the upside. But the only thing that I don't like is this candle right here, this guy right there. They could come in and smash price down, and what would do it, and it would make sense, and I wouldn't know that was their intended direction until I came back and saw it afterwards. And what would tip me off would be this guy right here, and this is basically a stop run. So as price is coming down here, they're cascading it sideways, and then bam, they take the stops and then drop it, pull the rug out of everybody, under everybody's feet, and drop it down and continue it lower and lower. And that's kind of why I'm kind of looking at this area in here and saying that could be suspect, just because of this candle right here. Again, what would negate that is if price traded up and through and we started challenging that high, then I'm got to worry about this candle. This was just regular price fluctuation, and it is what it is. So, and it just could be on with my dealer, who knows. So anyway, that's about it for copper. Definitely like this, though. Very encouraged by that. And again, with copper, we've got some big price ranges to fill in still yet. So, and I love this. Like, look at this. 1, 2, 3, 4, 5, 6 equal highs. Sorry, 1, 2, 3, 4, 5, 6, 7, 8 equal highs up in there. Relatively equal highs that everybody's got their liquidity sitting. And that's going to be the first interim target. And if price continues to push and we get some real bullish momentum behind it, these two equal highs up in here is what I'm going for next. So that's what I'm looking at. Nat gas had a nice gap. Doesn't look like it's filling it anytime soon. If you're not already long nat gas down here, don't get long now. Just hold off on that one. Bitcoin, still not doing anything. Talked about this. Had a nice little run up here today. So far, but I don't believe that it's going to be anything to write home about. I think this thing's going to keep smashing lower, and I've got a few other. I don't know if there's. Maybe just shoot it in the chat if you guys are crypto traders at all. Let me know. If you are, great. I'll go through a couple of my ideas on this. If you're not, totally fine. I'll just skip this and sort of save my time here. Look at this run up on U.S. Chinese dollar cross pair. U.S. dollar versus the Chinese yen. It's pretty incredible. And that's a big price move. Like, that's massive. And you can see them stalling right now. There's a lot of countries right now that are dumping U.S. dollars. They were buying it up there for a while. There's a lot of countries now that are in a sell program on all U.S. debt and U.S. dollars. So kind of interesting. Do a little research out there on your own, and you can check that out. But Anyway, yeah, sorry, Bitcoin, other, Litecoin, Ethereum, they're all sort of in the same trading range. They're just going straight sideways. I think they're going to come in and drop price down a little bit lower on a lot of these guys. Could be a lot lower on a lot of them. So just keep that in mind if you guys are a holder of Bitcoin or any other cryptocurrency. I don't think the pain is done yet. I think they're kind of just getting started. I shouldn't say they're getting started. I think they got started up here. You imagine all the poor bastards that got into this hype here. And if you were one of them, I apologize. I don't think I'm talking about you directly or anything. But I mean, could you imagine if you bought up into here and just for them to smash price down and you're holding that? Brutal. Anyway, that's why you don't get involved in hype. If there's a lot of hype behind something, you want to get in before that, not as it's being hyped up. If anything, you want to short something that's getting hyped up because of this reason right in here. But anyway, yeah, I think there's a little bit more pain on the crypto side before the long-term bulls start stepping in behind these things and dropping and pushing higher. So just kind of keep that in mind, guys. And until it breaks out of this trading pattern, I mean, I don't know. I mean, it'll bounce around in here a little bit more. I'm rest assured of that. But where exactly and how deep and how high, and I don't know. And I don't really want to get into analyzing it yet. I want to see once price does that drop and it starts taking everybody out here. See, I mean, look at this. I mean, look at this thing here. Everyone's thinking, oh, this is support. This is support. Support. Oh, we got a ton of support in here. So buy. And let's just go ahead and jam our stop up under here or under here or under here or under here. And then they're just going to play into that. They're just going to say, oh, yeah, perfect. We'll just make everybody think that they're on the right page, and we'll trickle price up here just to get all the guys who are going short out of the market, because everyone who's going short, their stops are here, here, and here. I don't know if we're going to get all the way up to this guy here. They're just going to come up. They're going to run those stops, and they're going to get those buy stops for everyone going short, and then they're going to drop price like a rock, and they're going to smash everybody out here. They're going to take up everybody's sell stop who's going long, and then they're going to rebalance down under here. Once price does that, I'll step back in, and I'll start reanalyzing Bitcoin, Litecoin, Ethereum, Ripple, and all of those fun ones there. So if that's okay with you guys, look at Ripple. It's pretty crazy. So Ripple started out at obviously pretty much nothing forever since inception in 2016, and then nice big price fluctuation up to 43 cents, rebalanced lower, and then it's basically sat between 13 cents and 30 cents for another year. And then look at this spike up last year, and that it was in a matter of 1 month it did that. They came in and smashed it up, and they just pulled the carpet out from under everybody. Again, I'm not laughing. I know a lot of people lost a lot of money doing this, but it's just crazy the way that they did that. It's like a pump and dump, like a penny stock. You've all watched Wolf of Wall Street, pump and dump stocks. This is the hype. This is what they do, is they hype everybody's long back in here, and all these guys are doing who are long back in here. They're waiting, and once the hype sets in, and everyone starts plugging all their money into it and buying. Guess what the guys who bought down in here are doing? They're selling all of this, and then that's when the bottom falls out, because there's nobody left. There's nobody left to sell their positions to. Nobody's buying, so the price just drops down, and away you go. Goodbye. And now we're back down to a little bit above inception highs, obviously. But again, I think this is another one where I think we could see price run underneath here. I don't know what that is. But yeah, I think they could come under this guy right here and scoop up all the people who are long back in here, if there is any, and take those guys out. So anyway, I don't see any questions. You guys are a pretty quiet bunch. I guess you're all just kind of sitting, waiting on your hands. Hopefully you are. But you can see, look at the rejection. I'm going to put out a 15-minute on here. Look at this. So one of two things. They're either going to push this thing down even further, and like I said, we're going to see them come in and rebalance underneath these two relatively equal lows down here if they decide to push that low. or even under here, there's a little bit of pocket of price action under there that maybe they could look at coming down into. Very, very small area, could be a target. I'll put that up on the price level here just to... yeah, roughly right around there. I'll make the number here, round it off to a 5 level. So that could be their target to the downside, if they get any momentum behind this move. But look at that candle. That's pretty crazy. That's a 4-hour candle right there. Pretty skinny. So yeah, I just wait till the volatility wraps up. Wait till the elections finish up, and have a look at New York. I'm in meetings for pretty much all of tomorrow, guys, so I don't have a chance to be into the charts. However, I will have a small pocket of about an hour there where I'll be watching them, and I can post up some ideas as I see them to our membership group. And by the way, if you're not part of our membership group, I encourage you to go to f45trading.com and check out some of our packages there, some of our options. I think you'll like what you see. We've got chat rooms, we've got signal rooms, we've got live feeds. By the way, just so you guys know, these live free sessions that I'm doing are not going to be free for much longer. We're going to be wrapping these up, and they're going to be for paid subscribers only to our membership group. So again, go to f45trading.com if you haven't already. Check out some options, see if it's for you. There are some stuff there that if you've got literally no budget whatsoever to work with, we do have some options for you to help keep you engaged, keep you in the markets, give you some ideas, and right up to if you need some help getting market direction because you are an avid trader, we do have other packages for you as well too. So have a look at that. And again, I'll be back sort of New York Open. Dave will be in, and so it's Wednesday tomorrow, so Dave will be in, and he's going to be crushing the S&P gold, and he'll be doing obviously an overall rundown on the markets for you as well too. Dave has been doing a great job calling the S&P and gold. Look at this. Dave was calling gold long in this area in here, and just worked out beautifully. Side note, I made this call yesterday on Tuesday, London Open. The low came in at 122.95. What did I say price was going to do? Come down to 123 and bounce. And look at exactly what it did. I'm going to just have a quick look at that. 123 and bounce. Look at that. And I just did it here not too long ago. 1, 2, 3, 4 hours ago. Just came down us a little past the 123 level. Rebalanced higher. Beautiful price action right there. If any of you guys are long, off of that call that I made, I would highly recommend. I totally forgot I made that call. I would highly recommend you you take all your profits out as price gets above this high. These 1, 2, 3, 4 highs in this guy right here. Take your profit up there and just sit on the sidelines if price moves up there. If you are long and you got in at that 120, 1230 level, then I would, sorry, 1230. 1223 level, then I would be moving your stop to break even. Do let price come down past that break even plus a plus a couple of ticks, just in case it does smash back down. Then you're not going to get totally stopped out and not make anything. You got to obviously pay yourself, or best yet, if you did get in at 12300 there, or 1223 there. God, I can't remember that number. 1223. Then I would even suggest you take maybe a good chunk of that trade off right now too, and just pay yourself. So that's about it, guys. Don't have much else to tell you. I'll be watching price. Dave will be in again. He'll be 9 o'clock, just shortly after 9 o'clock New York time. He'll be trading S&P and gold. I'll post that link when he's going live again for you, and he'll be walking through the markets, showing you some setups. And like I say, I won't be doing any live sessions until Thursday. But if I do see something that piques my interest after New York Open tomorrow, I'll shoot it your way so you guys can have a look at it. Post a couple of charts that bring your attention to. So, thanks guys. That's all I got. I hope you guys have a great rest of the week trading. Catch up to you later.